Hey everyone, and welcome to this explainer. Today, we're looking at the absolute ultimate financial dream, that exact mathematical moment when your own sweat equity is totally replaced by your portfolio's momentum. Imagine a day where the financial heavy lifting just isn't squarely on your shoulders anymore. It's a concept that completely redefines how we think about saving, investing, and the real mechanics of building wealth over a lifetime.
Okay, let's dive into this. At what exact point does the wealth you build start generating more value than your daily labor? That's the core mystery we're solving today. We're literally mapping out the precise moment that financial equation flips entirely in your favor.
Part 1. Meet the crossover point. It's essentially a literal race between two competitors, your hard-earned annual contributions versus your portfolio's passive annual growth.
So by definition, the crossover point is the exact mathematical moment your portfolio's annual growth finally exceeds your annual contributions. Think of this like a long-distance marathon taking place right inside your brokerage account. Let's say you're saving 10 grand a year, and your portfolio is historically yielding around 8%. Well, this crossover is the moment your returns finally hit $11,000. Boom! Your money is now running the marathon for you. It's the specific tipping point where financial gravity shifts entirely in your favor.
Part 2. The math behind the magic. Now, what's really interesting about this slide is the thrilling mathematical reality of how this race actually plays out.
Because wealth building isn't just magic, right? It's pure, undeniable math. Before the crossover, it's like you're manually packing and pushing a massive snowball up a steep hill. It's high friction. Every single dollar of growth feels like it requires maximum effort from you. But after the crossover, man, financial gravity totally takes over. That snowball has finally been pushed over the edge of the peak. It transforms into an unstoppable avalanche powered entirely by its own momentum.
In the early years, it's a slow grind. Your annual contributions are high, and honestly, they're doing absolutely all the heavy lifting. Your savings rate is basically carrying the whole team on its back. Meanwhile, your portfolio's annual growth is pretty low. It's just warming up. It really doesn't have the size or the strength to generate meaningful returns just yet, so it requires immense patience from you.
But then, we hit this absolutely thrilling milestone. The portfolio growth finally wakes up. It catches up. The race is completely tied. Literally, for every dollar you put in from your paycheck, your portfolio is now matching it, dollar for dollar, through its own returns. Your money is officially working exactly as hard as you are.
And then, the ultimate plot twist. The growth goes massive. It completely overtakes your stable contributions. It is just running away with the lead, doing all the heavy lifting for you. Your steady contributions are now just a drop in the bucket compared to that wild compounding engine. You have successfully crossed over, and the math has entirely taken the reins.
Part 3. Persistence over paychecks. Let's shift gears and look at the hidden engine revealed in our source material, the absolute secret to actually crossing that finish line.
So, what's the secret? Well, here is the hidden truth. It is not about a massive salary. Seriously, the math absolutely does not care about your job title, it only cares about time. It's a huge myth that reaching this point is reserved only for those with enormous raw savings or humongous incomes.
And this brilliantly illustrates that very point. Raw amounts saved are incredibly intimidating. And let's face it, they're fundamentally capped by your income. But return and persistence, those are highly accessible and entirely exponential. Your crossover date depends vastly more on your sheer stubbornness to stay in the market than your starting salary. Mathematically, persistence is what actually drives the real outcome.
Let's map out that persistence on a timeline so you can visually prove this to yourself. In year 1, as we saw earlier, it's a very slow start. By year 5 and year 10, honestly, it still feels grueling. You're building some momentum, but you are still doing most of the pushing. And this is exactly where most people quit because of market volatility or just unexpected life expenses. But if you stubbornly hold on to year 15, you approach that magical crossover. And by year 20, the sheer persistence of staying on that timeline is what allows the return to trigger the avalanche.
Part 4. Reaching your crossover. Let's bring this abstract math back down to earth and apply it to your personal financial journey.
Let's move to INSEA and see how this builds. To really make this happen, you need to maximize your rate of return, prioritize long-term persistence, and please, don't be discouraged by low initial savings. Because when you do these things, you realize something incredibly empowering. Time is your absolute greatest asset.
So the crucial point is this number right here, 100%. That is what the crossover point represents. It's the exact moment when 100% of the financial burden you used to carry on your own back is entirely lifted by your portfolio. It is total momentum shifting in your favor, giving you options, freedom, and the peace of mind knowing that your money is now the one clocking in for a hard day's work. We've explored the math, the mindset, and the unbelievable power of persistence today. You've seen exactly how the race is run and how the crossover is won. So I'll leave you with this provocative thought to ponder about your own trajectory. Look at your investments, look at your timeline, and ask yourself, when will your money finally cross the finish line and start carrying you? Keep pushing that snowball. The avalanche is waiting.